Welcome back everyone to Capital Planet Investing. My name is Justin. Today we are going to be looking over our portfolio and seeing how it is done after just investing into it for about a month. We have put in $100 into this account every single Monday since we opened it, and I did back it up all the way to the beginning of the year. So you will notice a change. And so if you look at fact, I used the $1,200 stimulus check to start this, and I now have $1,700 invested into it. I have been adding a total of $100 for the last 5 Mondays into this account, plus the $1,200 stimulus check. Our current returns are $144 already. And you can see we're up in just about every single stock except for waste management. This is the only one right here that we are not up in, but we're only down the $3 from our current investment, so that's not too bad. And I'm actually really surprised that we're up in every single one of them. The market has been very interesting lately, especially with the whole meme stocks happening. But let's go ahead and look at how our portfolio is handling. Apple, as you can see, is now trading at 136 as of today, and today is the 5th of February. We are up a total of $24 from when we originally invested. Starbucks as well. This is the stock I want to talk about today. I really want to focus on Starbucks and just kind of look over why they're in this portfolio. I think a lot of people understand what they do. I think they understand how much that this is projected to make. But I want to go into why is it in Capital Planet Investing? Why do I think this company belongs in like a sustainable portfolio? And that's ultimately what I'm making right here. This whole idea is a sustainable portfolio. And as you see, even my Starbucks stocks, I'm up $13 in. Okay, so let's go ahead and dive into Starbucks right now. And we are going to talk about why are they even in this portfolio. They are in this portfolio because if you go on their website, which is where I'm at now, I'm going straight to the source. They have a whole section in sustainable impact right here. They didn't want to highlight all that, but they have a whole section sustainable impact. And that's the whole thing that we're trying to do here. Remember that ESG is basically this idea. Like, so here we go. Here's one right here. This is an article where they talk about rolling out for strawless lids, which effectively means that you won't need to have plastic straws anymore, or even paper straws for that matter, and the lids themselves will just grant you that. So that's fantastic. They're going to lower their carbon footprint simply by not having straws anymore, at least in this. Now, if you remember in the last video, we talked about the fact that there are plastics being banned across America. And so why is Starbucks investing in this? Well, that article specifically talked about bags and plastic straws. And so if you see here, Starbucks is like, okay, it's already in about 9 states that's like that. And it's going to happen in more and more states. And so they're preparing for that moment to happen right away. And they're already starting to go on it. Now let's go ahead and look at another one that I really liked about what they were doing. They're trying to hire an extra 100,000 youth for the year of 2020. That's what they came out with here. So obviously 2020 is over with, but they provide career and educational opportunities. Now I know for a fact, because I've had several friends who actually worked their way up in Starbucks, and now they're store managers, and they love Starbucks. Starbucks has educated them, they have trained them, they've given them opportunities. So right here, they are investing in the people that they hire, which I think is fantastic for a company. It definitely kind of follows the ESG model again, especially on the community side, the fact that their own community, their own staff, they're educating and training and effectively giving them higher paychecks because of what they're doing. So that's why this is a big one for me. It's investing in the community. There's lots of things here for you guys to see. Farming communities is another fantastic one. I really liked reading this one over. So here this article kind of dives into the concept that they want to invest in local communities while also caring about the environment. So once again, following that ESG idea, they're helping the community and they're also helping the environment at the same time. Here's another article I read, and so if you're one of those people that invest in plant-based foods, this might be very interesting for you. If you notice, I definitely had something that was in that category. I don't know if they'll be part of Starbucks. I by no means am saying that. Starbucks is also using some of the food and resources that they have to go into their plant-based choices, which once again, it's just lowering their footprint by doing that. They are going to have a more environmentally friendly menu and contribution. Once again, you guys can go straight on their website. This is all here. I'm a big Starbucks supporter. I love the company. I drink their coffee. I buy their creamer in the grocery stores. Whenever I'm traveling, Starbucks is usually the spot that I go and get my coffee when I'm away from home. And to me, it's just a fantastic company. And one really cool thing I liked about Starbucks is 2020 was an interesting year for company. And everywhere I went, Starbucks' lines through their drive-thru were insane. Like, I realized that they didn't hit everything that they were hoping for this year, but they didn't really suffer that much. Okay, so Seeking Alpha is a great website that I like to go and look up data, and I'll just kind of skim through this because this video is already going a little bit longer than I intended it to be. I really want to try to keep these as short as possible for people, so we'll just kind of glance at Seeking Alpha really fast, and we can just kind of type in Starbucks right here, and we could kind of see what they're doing and where they're going. So last year, Starbucks was trading at around $90 a share. And today they're trading at 106. As of right this moment, they're trading at 106. And one of the cool things about this, if you started investing right here, 2020 was an interesting year. We all know what happened right around here in the market, and it just kind of crashed, and you could have got into Starbucks at like $58-$60 a share, and you could have rode all of this up plus all of their dividends all the way up. So you could kind of see this. You could also kind of look at their PE. So their forward PE which is what they're thinking they're going to be making. Now this one may not be that good. Once again, they're recovering from what happened in 2020 still. So it's showing a 36 forward PE. I don't know if that's necessarily true. I actually think that it's a little bit better than this. And I think over the next year, you're going to see this come down even if the stock just stays at this price. You'll see this come down as they get back. And let's just kind of look at why I think that. So if we hop over into earnings really fast, they didn't have a 2 beat, but they had a 1 beat on some of their targets for this last quarter, which is really, really good. In the sense of what happened in 2020, the fact that they could even beat any analysis report is really, really good. If you hop over into earning estimates, and this is what I think is really, really interesting, they're expecting in 2021 for them to grow 143% this year. That's amazing. That's like a growth company. Not to mention, they're saying in 2022, they'll grow another 21%. That is huge. And so this should make up for a lot of what happened in 2000. That's what this should do. And whatever it doesn't make up, this will cover all the rest. And if we could keep pumping out somewhere between 10 and 20% remainder all the way down, that this stock is only going up from here. Here's a fun little website. You could just type in stockchoker.com. And this kind of lets you see past performance. And I really like to do this on stocks that I'm looking into, especially ones that I think may get bigger. So we all know that the SPY is a big one. So let's go ahead and do this. And let's say we decide to set this goal right here of doing $100. Maybe we got a $1,200 stimulus check back in 2000. Okay, and we're gonna add $100 to our account, and we're gonna just kind of keep doing this in dollar cost averaging in. And by the end of the year, we would have that $1,200 plus the $5,200 for 52 Mondays a year, and we would have a total of $6,400. And so we're gonna say by the end of 2000, we have done $6,400. Okay. And we finished the year off like that. So let's just go all the way down to the very last day, and we're going to do it in 2000. This is when we did it. So we've effectively had, as of today, we definitely would have a full 20 years invested in the SPY. And we go ahead and calculate that out. If you did that, the SPY would have returned a good 300% total. Your profits would be at $21,000, and this is a nice big number considering I only put $6,400 in the course of that year, and I've averaged a 7.54% return through the years. But here's the thing, the SPY is full of hundreds and hundreds of companies. Some of them are doing fantastic and some of them are not doing fantastic. And when I look at a company, I want to say, who are the winners in the SPY market? Who are the ones? And I say, okay, let's look at Starbucks. Let's say all I did was I chose one company. And if you notice, my portfolio does not have one company in it. But I say one company that I'm going to invest in for the next 20 years. And by the end of this date right here, I have contributed this much money in here instead of the SPY. What would that number be like? And whoa, that is a substantial difference. Okay, I now would have $143,000 invested into Starbucks, yielding a total of 2,100% easily and a 16.72% annually. And so you can see one of the reasons the SPY has been yielding those returns is Starbucks was part of that. They had huge returns. These returns offset the losses of other companies. So let's quickly hop back over into our portfolio again. Now you understand why I am choosing to diversify. I have some of the strong leaders in here like Disney and Starbucks and Apple. I have some newcomers that could be something crazy like a 34X or a 54X like Nano Dimension. Do I think it'll be there? I don't know. I don't know where it's going to be. I know Nano has gone up a lot, but I want to add companies that I think could be a good long-term player. Switch could be another one of those Starbucks like performers in the tech space that just does really solid all the way across and does something like a 20-30x over the course of 20 years. And that could be good. And same thing with Chef. I think Chef right here, the Tattooed Chef company, I think Tattooed Chef could definitely be a kind of Starbucks in its environment, and that is also really kind of cool. So I have some things that I think could be at the level of a Starbucks, maybe not at the tech, but I have them in there and I have players and I'm just slowly adding to those positions. And we will see where they're at in a few years. We're going to track this portfolio once again over the course of the year, let everybody see how it's doing. As you can see, I'm already positive $144.94. And I've only been doing this account for a short amount of time. I have $1,700 invested. And just to give you an idea, if I put $1,700 into a savings account, I would not have $144 increase in the course of 1 month. I wouldn't have that. Okay, so this video has gone a little bit longer than I intended to. I'm going to wrap it up here. I first want to remind everybody that this is not financial advice. This is something that me and my wife are doing and the stocks that we are actually investing into. This is meant for your fun and entertainment and something for you to see how an individual does it and then talk with your financial advisor to understand the risks that are associated with this and see what is best for you guys. Please like and subscribe if you want to keep following this content, and I look forward to putting out more in the stocks that we have been investing in, and hopefully that is something that you guys are interested in. Thanks.